Hello, this is Dean Malone with ComPsFX. Hope you're doing well today and getting some good trades. In a previous video, I showed how to use Fibonacci retracement and extension levels to project price levels for tomorrow. By simply using the Fibonacci levels, we were able to determine where price may be at tomorrow. Well, taking that same concept and sharing with you some of the best kept secrets of institutional traders, what they do is they use previous prices to determine where price will be in the future. Another technique you can use is to simply use trend lines. Trend lines are some of the oldest indicators around, and what we're going to do here is simply connect lows to lows, highs to highs, and we'll also use the technique of going from a low point to a high point, or vice versa, from a high to a low, what's known as a cut-through trend line. Using simple trend lines, you can literally project where price will be tomorrow or the following week or the following month. So let me give you some examples of that. Here we have the euro dollar. I've moved back one day and I'm going to connect some highs and then I'm going to connect some lows. So we'll simply start out, and what I'm using here in MetaTrader 4 is simply the line studies, and I'll be using the trend line. So I click on the trend line and I'll connect a high to a high point. Very simply, that's all there is to it. Now, if your trend line doesn't look like this, double left click on it, right click, select trend line properties, go to your parameters and check the ray. You want to make sure the ray is checked. Now, also under the common tab, I have the draw object as background checked because I want it behind my average price bars, my pack channel, so I can see price a little bit better. Now that high to another high, then what I'm going to do is connect a high to another high. I'm going to connect a low to another low. Connect a low, we have a low right here, to another significant low. Now what I'm looking for here and these highs and lows is that the market's made a retracement or it's made a push and bounced up. So I'm not going to every single low to low. I'm looking for the market to have made a move. Like from this high, it made a push down and then push back up to that high. So therefore I have a low to this low instead of this low here. Now this made a push on down to this low, made a bounce back up. So I'll connect that low to this low. This was a new high. Push down, made a push back up, another new significant high. This is all I'm going to do at this point. Now you can also step in and use horizontal lines. With horizontal lines, what you're looking for is average price being hit with lows and highs. So in this case, I have a high point here and I have a low point. So somewhere right in that area, in the event that price is to move back to the upside. Okay, if it continues going down, it won't get back up there, but suppose it does. I'll look for that. Okay, now with no more trend lines, and you can put as many trend lines as you want, but at this point with no more trend lines, let's just move forward and let's see what we have here. I'll move this out of the way. We can see that the market had moved down from underneath this trend line. It hit this trend line, bounced up, came down and hit this trend line, did a little bounce back to the other one. Then what we did was we walked the trend line, meaning following it. There are three things that are going to happen with a trend line. You're either going to bounce off the trend line, break the trend line, or you're going to what I call walk the trend line, which is to follow it. The market follows this trend line, pushes up to the next higher trend line, bounces back, then pushes on up to this trend line. A little bit move back, but eventually we move all the way up to this trend line here. And we bounce around. It spiked a little bit higher, then fell back down to this trend line. And there might have been another trend line here. I'm not sure. I didn't draw multiple trend lines here, but it might have come down to another trend line there. We bounce around, back and forth, off that trend line, back to this trend line. I hope you get an idea here of what I'm doing. Simply drawing out the trend lines and looking for the market to meet one of those trend lines. At that point, you have to look at the market dynamics to determine if we're going to get a break, a bounce or if it's going to continue following that trend line. Again, what we're doing here is to literally project where price levels might be the following day. Now let me give you a few more examples. We'll take a look at the Aussie dollar today, and you can see that the Aussie dollar, I simply put two trend lines on the chart. I went from this low to this low, then went from this high to that high. And you can see what the market's done today. With not putting any other trend lines on the chart, you can see what's taken place here. Now you can see that the market made a push down to this level right here and then bounced back up. So where do we find this at? It could be another trend line from that low to this low. You can see where the market came down and hit. It could also be the fact that the market just hit a low point for the day and you put a horizontal line in that, and you can see how the market hit it, went through, but stayed right in a little bit of a range off that one trend line. And you can see right now as the market's pushing back up, what did it do? It came right up to that trend line based upon the highs of yesterday. Very simple technique, but this is one of the techniques that institutional traders use over and over again to determine where price may be the following day. Now let's take a look at the Euro Aussie dollar on a 4-hour chart just to look from a weekly perspective. As you can see here, I've got 3 weeks showing the current week that we're in here, last week, and a couple weeks ago. You notice that I've also laid on some horizontal lines that have average lows or average high points. You can see this point to that point. But at the same time, we can draw trend lines. So if you simply go from this low to this low, point right in that area, you can see how the market, when it came down, it hit that trend line and took a bounce off of it. Okay? At the same time, we can look to see where might we go from here on a weekly basis. I can go from this high point to this high point here and look to see what the market did. Another point hit and a bounce off of that. Now another thing I want to point out when you're using trend lines, when you have confluence of two trend lines, the diagonal trend line and the horizontal trend line, when they come together, that is a significant price point that the market can move to. So we can see here that as this might turn back down, we might see price come right around that 3240 area when the diagonal trend line here meets with the horizontal trend line. And that's right about that 3240 area. If the market pushes up, we might see it push on up and get beyond this level